Every trader has experienced that pivotal moment. It's a feeling that resonates deeply. You step into a trade filled with conviction. Your analysis is spot on, your levels are crystal clear, and your risks are precisely defined. As the chart shifts in your favor, vibrant green numbers dance across your screen. Suddenly, your heart races with anticipation. Your profit may be modest, but it's enough for that little voice in your head to whisper, "Take it now," before it fades away into nothingness. You find yourself hovering over the close button, torn between the plan you meticulously laid out and the blaring sirens of your emotions. Before you even grasp it, you've exited the trade prematurely. A wave of regret crashes over you as you witness the price journey right to where you predicted, hitting your original targets without you on board. This scenario encapsulates one of the fiercest psychological struggles traders face: the temptation to close trades too soon. At first, it feels like a harmless decision, a victory even as you pocket those quick profits. Yet this behavior reveals a deeper issue: a wavering trust in your strategy, a deficit of discipline in your execution, and an overwhelming urge to secure safety in the present rather than exercising the patience required for long-term success. Repeating this pattern over time is a surefire way to undermine your development as a trader. Why is holding on to trades such a monumental challenge? It's not merely about strategy, it hinges on psychology. The market has a remarkable way of exposing every flaw within you. When you close early, you're not responding to market cues. You're yielding to your own fears: fear of losing unrealized gains, fear of being wrong, fearing that green will transform into red. These fears are daunting because they tap into fundamental human instincts ingrained from childhood. We're taught to safeguard what we possess, that a bird in the hand is worth two in the bush. In trading, this instinct is amplified, given the tangible stakes involved. Yet there lies an irony within this scenario. The ability to hold trades, to see them through, distinguishes amateurs from professionals. Amateurs chase after quick wins, scrambling for every last penny. They take profits at the first hint of movement. Conversely, professionals grasp that the game revolves around consistency, not fleeting satisfaction. They recognize that sticking to trades as per the plan is what ultimately propels their equity curves upward over time. A single hasty exit may seem inconsequential, but when it becomes habitual over weeks and months, it obliterates your risk-to-reward ratio, dissipates your edge, and entraps you in a cycle of frustration. Let's reflect on it for a moment. You risk 20 pips to yield 70, yet you consistently cash out at a mere 10 pips due to anxiety over a potential reversal. On paper, your strategy gleams as a winning system, yet in practice, your psychology warps it into a losing venture. The fault lies not with the edge, but rather with you. This realization is why many traders hastily blame their indicators, their brokers, or the market itself, when in fact the true battlefield exists inside. The difficulty in holding on to trades is merely a manifestation of emotional fragility. One particularly damaging effect of closing a trade prematurely is its ability to rewire your brain. Each time you pair profits early and feel the release of relief, your brain rewards you with a hit of dopamine. You feel secure, you feel intelligent. But then, as you watch the market appreciate toward your initial target, regret overwhelms you. Your emotional experience morphs into a roller coaster of fleeting highs followed by crushing lows, and you find yourself trapped in this relentless cycle. You train yourself to favor immediate emotional relief over strategic discipline. Over time, this habit becomes so ingrained that even when you know you shouldn't close a trade early, your hand instinctively moves, like some form of addiction. You grow dependent on the fleeting satisfaction of securing tiny victories, even when those victories sabotage your growth. This form of addiction in trading is perilous, blinding you to the broader picture. Your focus narrows from long-term stability to immediate comfort. You trade out of a desire for safety rather than seeking profit, and the market punishes this mindset relentlessly. Let's confront the harsh truth. Your inability to hold trades hasn't arisen from the market's inherent fearfulness or unpredictability. It stems from a lack of complete trust in yourself. You don't fully engage with your analysis. You don't fully embrace your strategy. You don't trust your risk management sufficiently. Most critically, you lack confidence in your capacity to endure discomfort. Because holding trades demands just that, discomfort. The discomfort of watching profits ebb and flow. The discomfort of seeing the price hover close to your entry point. The discomfort of waiting for confirmation that may require hours or days. If you can't tolerate that discomfort, you'll forever close early. Picture this: two traders enter the same position, both armed with identical analysis, entry points, stop losses, and targets. Trader A witnesses the price swinging in his favor, succumbing to panic at the first hint of green, prematurely exiting with a small profit. Trader B experiences similar fluctuations but remains composed, trusting the system implicitly. Trader B feels the same fears, battles the same temptations, but chooses not to succumb. Eventually, the trade hits its target. Trader A is left with regret, while Trader B delights in the reward. Now imagine multiplying this across 100 trades. The disparity becomes monumental. One trader enjoys consistent growth, while the other watches his account stagnate or decline. That's the power of patience in holding trades. It's not about merely being right, it's about executing flawlessly. Anyone can press the trade button. Engaging is simple, but holding on, that's where the true skill resides. That's where discipline is forged. It's in this crucible that traders either flourish or falter. Hence, when you study professional traders, you notice that they don't fixate on entries as much as retail traders do. They recognize that the edge lies not in pinpointing the perfect entry, but in maintaining their commitment to trades until the logical conclusion is reached. Retail traders obsess over landing the exact candle, whereas professionals prioritize self-management once they've entered a position. Ask yourself, how many times have you closed a trade prematurely only to see it reach your target afterward? How many times have you shortchanged yourself simply because you couldn't endure the discomfort? How frequently has your strategy shown promise, yet your execution faltered? This painful realization is one that every trader must confront. The market doesn't defeat you, you defeat yourself. The most bewildering irony is that the very sensation you shy away from, discomfort, holds the key to your success. If you can learn to embrace that discomfort, if you can cultivate the strength to hold through the emotional turbulence, if you can silence the voice urging you to exit prematurely, your trading will transform, not due to a shift in strategy, but because your mindset will evolve. Holding on to trades necessitates maturity. It involves developing the emotional resilience to stay the course. It may not be glamorous or exciting. It's often slow and unadorned. It's sitting on your hands, resisting the urge to act while your brain clamors for immediate results. Yet that mundane discipline is precisely what yields extraordinary outcomes. The ability to persist when others falter is what distinguishes winners from losers. To succeed, mastering oneself is paramount. Acknowledging that early closures serve as a disservice, not a safeguard, is the initial stride. Each time you close early, you reinforce the notion that fear is triumphant. Conversely, when you adhere to your plan, you're asserting that discipline holds the ultimate power. Over time, one of those choices will become your identity. Whether you succumb to fear or embrace discipline hinges on your decisions during moments of discomfort. So, the next time you observe green flickering on your screen and experience the impulse to hit close, pause. Reflect, is this action aligned with your plan, or is it simply a response to fear? If it's fear, then clarity of intent emerges as the right choice, for true growth in trading evolves through grappling with discomfort. The challenging task here is to hold your trade until your plan dictates otherwise. This is the commencement of authentic discipline, a shift toward becoming a trader who doesn't merely take trades but fully masters them. Trading is a mirror, revealing our worst impatience. Initially, you may overlook it, but impatience creeps in stealthily. It's a thief of focus, whispering doubts. This is taking too long, or what if it turns against me? It evolves into physical tension. Your shoulders tense, your breath quickens, your hand lingers over the mouse. Before long, you're not engaged with the chart. You're ensnared by your emotions. Those feelings propel you into action. You close your trade prematurely, not because your plan demanded it, but because your impatience couldn't bear the strain. The truth is, holding a trade isn't challenging due to market conditions. It's a struggle against the relentless march of time, perhaps the cruelest pressure within trading. The market may align with your anticipated direction, but if it doesn't conform to your desired speed, you start to unravel. This serves as the silent enemy. It's not about whether your analysis holds merit. It's about whether you can withstand the cacophony of your own mind while price graph takes its course. Envision two traders observing the same trade unfold. The setup is solid, the stop-loss secure, and the target realistic. After 30 minutes, one trader grows restless, pondering, why hasn't there been any movement? His thoughts race, concocting reasons to bail out. He contemplates unverified news. He fixates on the capital tied to this position. He imagines alternative trades for that money. Ultimately, he succumbs to his anxiety, closing for a marginal win or a break-even. An hour later, the trade reaches its full target. Meanwhile, the second trader remains calm, trusts the plan, and allows the market adequate space to unfold. One trader secures relief while the other garners tangible results that succinctly encapsulates trading psychology. Most traders are not defeated by flawed analysis but by their own impatience. They don't succumb to the market but to time itself. They yearn for results to align with their schedule, not the market's. Yet the market cares little for your timeline. It moves gracefully on its timeline. Your mission isn't to commandeer time, it's to endure its passage. The real dilemma is that impatience often masquerades itself as logical reasoning. You persuade yourself that your exit is justified. Maybe the market appears shaky, or perhaps you should safeguard this profit. Yet those aren't genuine observations. They're excuses your mind generates in order to alleviate the discomfort of waiting. It's akin to surviving a lengthy flight. You know the plane will eventually reach its destination, yet each minute in the air stretches interminably. You can't speed it up, all you can do is endure. Holding trades mirrors this experience. The destination remains clear, yet the journey exacts a toll on your nerves. The market tailors its tests, rarely steering in a smooth line. Creates pullbacks, consolidations, false breakouts, and teases you near your stop-loss or target, dragging sideways just enough to witness your patience fray. It's as if the market queries, "How fiercely do you desire this?" Most traders respond by exiting early. A handful respond by holding firm, and those few are the ones who prevail over time. Recall those trades you exited too soon. Was it due to a valid analysis being invalidated, or was it simply your inability to endure the stillness? For many traders, the latter holds true. Impatience has robbed you, not merely of profits, but of the opportunity for growth in discipline. Each submission to impatience reinforces this habit, teaching you to retreat whenever time exerts its pressure. Soon, trading morphs into a pursuit of comfort rather than following a deliberate plan. This cycle is why many traders find themselves in perpetual limbo, even while aligned with prosperous strategies. They're not in a bind due to a lack of knowledge. They're losing because they cannot wait long enough for the market to yield its rewards. Their strategic edge exists yet remains impotent due to their impatience. They've built a system with a risk-to-reward ratio of 1:3, yet they keep cashing out at 1:0.5 simply because they are weary of waiting. The edge lacks an opportunity to manifest. When reflecting on their results, they blame the strategy, failing to recognize that their real shortcoming was one of patience. The irony lies in the perception that patience equates to doing nothing. Yet in trading, patience embodies everything. It's the intangible quality that separates consistent victors from inconsistent dabbles. Anyone can click buy or sell. Anyone can establish a stop-loss and a target. But not everyone can endure second by second, minute by minute, hour by hour, holding steadfast while the market weaves its intricate dance. Patience may appear passive, but it represents one of the most proactive disciplines you can nurture. Each moment you resist the urge to sabotage yourself strengthens your resolve. Consider this. If your system has a legitimate edge, then your role isn't to interfere, but rather to permit the edge its necessary time to take form. This entails holding onto your trades until your plan instructs otherwise, not blindly grasping but holding with unyielding discipline. The distinction between reckless hope and patient waiting is profound. Hope manifests when you continue to hold a flawed trade, despite it straying from your plan. Patience arises when you maintain position in a valid trade, simply awaiting its maturation. One path leads to ruin, the other guides you toward success. Nevertheless, let's confront the reality. Patience defies the typical human instinct. We're wired for immediate action, compelled to resolve discomfort. Hence, we often seek distractions. It's simpler to scroll through your phone than to endure the silence. It's easier to take a small profit than to wait for your true target. Engaging in action feels inherently safer than remaining idle, even if that action leads to detrimental outcomes. In trading, this instinct is ceaselessly punished. It rewards those steadfast in their will. Here lies a stark truth. If you cannot hold on to trades, you'll forever remain bound by your potential as a trader. You may experience sporadic profits, yet your growth will stagnate as it hinges upon your capacity to let your winners flourish. Just a couple of significant wins can define your monthly performance, but if you never permit them space to breathe, you're condemned to perpetually chase meager profits. And meager profits seldom construct prosperous accounts. So how do you confront impatience effectively? You don't fight it by denying its existence. You confront it head-on by accepting its presence, training through it. The discomfort that accompanies waiting will never fully dissipate. Even seasoned traders feel its bite. The discernible difference lies in their refusal to yield to impatience. They experience the same sense of urgency yet continue to hold their trades. They've forged their discipline muscle to withstand discomfort. Like any muscle, it only strengthens through consistent exertion. Each instance you endure discomfort transforms future resistance into a manageable task. Conversely, every exit weakens this muscle. View patience as your pass into the realm of professional trading. Absent of it, you remain a retail trader, perpetually chasing mini profits and harboring substantial regrets. Cultivating patience allows your strategy the essential time to function correctly. You cease trading impulsively and instead begin trading with unshakable discipline. Mastering patience catalyzes a true transformation. Chapter 2, at its core, implores you to acknowledge this silent adversary, the impatience that derails so many trades. It's an inevitable facet of the trading journey. It may be unshakable, but it's manageable. You can condition yourself to embrace discomfort rather than capitulate before it. Remind yourself that every moment you adhere to your plan is a triumph, irrespective of the trade's ultimate result. The real victory lies not in the profit, but in the execution, following your strategy rather than your fluctuating emotions. The next time you find yourself ensnared in a trade where the passage of time feels burdensome, remember this truth. Impatience is your ultimate test. The market isn't solely examining your analytical skills, it diligently assesses your patience. And should you pass that test, if you can endure the deafening silence, the monotony, the price oscillations, you will unlock a level of trading discipline that few ever attain. When you achieve this, you transcended the realm of a mere trader and evolved into a professional. Trading has often been depicted as a realm dominated by charts, indicators, and strategies. Yet when you strip away the layers of candles and numerical data, the stark reality emerges. Trading is not dictated by the market itself, but by time. Not merely measured in seconds or minutes, but in patience, perseverance, and a willingness to outlast the weaker players in the game. The final lesson every trader must internalize is simple yet profound. Your true edge does not lie in prognosticating the market's next move. It rests within your capacity to remain steadfast longer than your emotions implore you to surrender. Reflect on the traders who thrive. They don't flourish due to some elusive magical indicator or hidden pattern that eludes others. They persevere through the art of waiting. They learn the rhythms of patience, the necessity of allowing a trade to unfold, and crucially the discipline to trust the edge over the course of hundreds, not just a handful of trades. That is the secret of the long game, where most traders falter for their inability to commit to this journey. The market is subtly designed to test your resolve. Each spike, each dip, every whipsaw emerges as an examination. Do you genuinely believe in your strategy, or are you merely chasing fleeting victories? If doubt creeps in, you will falter. You'll grasp for profits too early, diminish your winners, and interfere in circumstances necessitating your absence. In retrospect, the realization will wash over you. The market was never your enemy, it was your own indecision. This realization stings, yet marks the inception of your transformative journey. The long game requires a seismic shift in perception. Many traders approach each trade as an isolated event, as if every move reflects their intellect or skills. They see losses as personal failures and wins as testimonials of their worth. Yet the reality is that no single trade holds significance, not one. What genuinely matters is the collective outcome of hundreds of trades executed with unwavering discipline. Once this truth resonates, the fixation on individual trades, whether they win or lose, subsides. You begin to think like a casino. Each spin of the wheel may be arbitrary, but the house focuses on the long-term odds. Your mission becomes mirroring that insistence on the long haul. Acknowledging this concept may seem daunting. Human beings naturally gravitate toward immediacy. Our mental architecture compels quick gratification while avoiding pain rapidly. This instinct explains why holding trades often feels torturous. It's counter to our biological wiring. When your trade lingers in profit, your mind reckons with securing it swiftly, fearing loss. Conversely, during drawdowns, your psyche clamors for an escape before the situation worsens. While this instinct may have safeguarded your ancestors, it courts disaster within the market. The long game demands you override instinct with unwavering discipline. Yet, discipline isn't solely a matter of willpower, it runs deeper. Willpower eventually wanes. Relying on sheer strength will cause you to crumble under pressure. Discipline must be entrenched within your process. This translates to employing stop-loss orders so you're not constrained by arbitrary exit decisions, defining targets so you're not tempted to cash out too soon, committing to a plan before initiating a trade so your clarity remains steadfast against turmoil. Discipline doesn't spring forth in the moment. It's about building a robust system to withstand the emotional storms that inevitably arise. The long game also necessitates emotional endurance. You will encounter losses. You will navigate drawdowns. You will wrestle with self-doubt. These are not indicators of failure. They're rites of passage on the road to triumph. Many traders retreat at the first sign of struggle, believing setbacks signal an end to their aspirations. In contrast, seasoned professionals persist. They avoid impulsive revenge trades. They don't abandon their strategies after a rough week. They refuse to allow temporary pain to obscure the path to long-term development. Their tenacity propels them to a destination unreachable for most. The essence of endurance transcends technical mastery. It demands unwavering belief. Belief in your edge, belief in your capabilities, belief that patience ultimately yields success. Absent belief, you risk crumbling when the market tests you. With belief, you outlast the storms that might break others. However, belief doesn't stem from motivational quotes or pep talks. It's forged through evidence. It's built by witnessing your edge operate reliably, not flawlessly, but gradually enough to validate its authenticity. Each journal entry, each backtest, and every reviewed trade fortifies the wall of belief. When this wall stands firm, you can lean upon it in moments when your emotions threaten to unravel you. Another invaluable lesson derived from the long game is the necessity of humility. You are not more insightful than the market. You cannot outthink, outguess, or control it. Your role isn't predicated on being correct. It lies in managing risk, adhering to processes, and allowing probabilities to function autonomously. Arrogance holds no purchase in the long game. The instant you presume mastery over the market is when you cease to respect it. Disconnection invites swift punishment from the market. The traders who endure are not the loudest or the most boastful. They approach trading with a respectful humbleness, acutely aware that the market owes them nothing. But humility should never be mistaken for fragility. It embodies strength in restraint. It's the courage to abstain when clarity falters, the patience to endure turbulence when your strategy aligns, and the maturity to accept losses without seeking revenge. Within the realm of trading, restraint is not passive. It's an unrivaled power. The market thrives on impulsive traders. Those who possess the patience to wait, the fortitude to endure, and the discipline to remain still when chaos surrounds them will ultimately prevail. More paradoxes unfold within the long game. The less you attempt to micromanage every tick, the more genuine control you truly wield. When you fixate on each price movement, you become enslaved to its erratic behavior. Your emotions fluctuate alongside each flicker of the candle, ensnared in a storm of noise, reacting rather than executing with intent. Yet when you disengage, when you trust your strategy, when you allow the trade room to breathe, you regain authority, not over the market, but over yourself. And ultimately, mastery over oneself remains the only control that truly matters. What complicates the long game is that the rewards frequently elude immediate visibility. Initially, discipline feels tedious, patience seems unrewarded, and restraint morphs into missed opportunities. The market lures you into seeking instant happiness while the long-term gains silently loom, waiting to emerge. Gradually, over months and years, the compounding benefits become apparent. Small victories accumulate. Consistent risk management shields you from harm. Emotional control safeguards you from catastrophe. One day you glance back and recognize what others couldn't. The long game has been compensating you all along. This presents the gravest contradiction in trading. Your genuine profit isn't merely quantitative. It reflects the person you've evolved into. Money may flow, accounts may fluctuate, but the discipline you cultivate, the patience you cement, and the emotional strength you fortify are immutable. These qualities transform not just your trading journey, but your very existence. The market, in its relentless pursuit, molds you into a stronger, calmer, and wiser individual if only you allow it. Thus, the crucial question remains, is it possible to generate short-term profits? Absolutely, which many achieve by sheer fortune. However, the core inquiry probes deeper. Can you sustain your presence long enough for your edge to manifest? Will you hold steadfast when others retreat? Can you adhere to discipline when chaos erupts? Will you remain serene when temptations beckon you toward distraction? If you can embrace these challenges, the outcomes become inevitable, not due to guarantees from the market, but because of the mathematics of probability. While the long game doesn't promise immediate triumph, it invariably rewards unwavering persistence. As you conclude this journey of insights, remember, holding trades embodies character, not charts or patterns. It's not about forecasting with pinpoint accuracy, it's about maintaining faith in the process. It's not about evading fear, it's about navigating through it without surrendering. The market will challenge you time and again, while emotions will tempt you countless times. However, if you can endure, if you can withstand the turbulence, if you can persist through hardship, the long game will unveil its rewards, not today, not tomorrow, but in due course. Always in due course.